Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which has now turned support. In fact, from here, all these previous rejections to the downside were created. And what we can see at the moment is that the market has broken above that zone. So all this previous resistance is now turned support at this level. And what we could expect is for the market to go and retest this previous monthly resistance turn support and then potentially to get rejected to the upside. So from a monthly standpoint, everything seems quite bullish. Now, dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we can notice how the market clearly has been creating higher highs and higher lows. In fact, we can see the first higher high here, then the correction and the higher low, then another higher high, then a move lower and the creation of another higher low. And now the market is in between this previous high and this previous low. So it seems like more bullish price action from here definitely seems possible. Also, if we look at the patterns, we can easily identify a clear impulse followed by this correction. And in general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.5 and 0.618 Fibonacci retracements lining up exactly at this area, creating a quite strong support zone. And at the same time, if we extend this level to the left, we can see how this was also the previous weekly resistance from which all this move to the downside was created, which now that the market has broken it to the upside is turned support here. So actually we have confluence of support at this level because we have both the 50% and 0.618 Fibonacci retracements and this previous horizontal level of resistance here, which is now turned support. And when you have a confluence of support area, you will expect to see institutional longing inside of the zone that at that point would further increase the probabilities of a potential rejection to the upside away from the level. So the weekly time frame as well seems quite bullish. Dropping down the daily time frame, what do we see? Well, from a daily perspective, clearly we can see how we have previous daily resistance here from which all these rejections to the downside were created, which is turned support here. And we can also notice a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And we can notice how we have the 0.786 and this previous level of daily resistance turned support, both lining up exactly inside of this zone, which is the same concept that we have just identified on the weekly time frame. So again, we have a confluence of support area inside of which we have good probabilities of seeing more institutional longing. Now, if we go and see, after having identified the confluence of support area, if we go and see what is going on when it comes to the commitment of traders, so how hedge funds and the non-commercials in the market are moving their orders, if we look at the net positions, we can see how clearly with the last reports, we went from having 71.4k net positions all the way up to having 207.7k net positions. Now, this is a clear increase of the net positioning, meaning that institutions are moving back to the bullish side for gold. We can see, in fact, how they have been decreasing their shorts, going from 148.8k all the way down to 82.1k, and longs got increased from 220.3k all the way up to 289 0.8K. So clearly institutions have been moving back to the bullish side for gold, making it stronger. Now, moving back to the technical side of this market, we have to identify how, since this area is a confluence of support zone, we have the possibility of seeing more institutional longing inside of this zone, which at that point could increase the probabilities of a potential rejection to the upside away from this level. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market will shift during this move to the downside, from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential rejection to the upside away from this confluence of support area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.